Hey, this is Tom Nash, and welcome to the 10-minute recap executive summary of the Palantir Q2 results. So first of all, on the screen right now, let's start, first of all, with the good things. The government is growing still 13% right here. You can see that. Also, the commercial side is growing 46%. Good. That's all fine and dandy. If you scroll down, you see a little bit of a problem. Now, this is called net dollar retention right here. This 190% I just highlighted. And the problem with this number is that it represents something very important. For a SaaS business, this number is everything. It's basically how much more your existing customers are spending year over year. Now, this number is everything for SaaS. Now, for Snowflake, that number is at 180, give or take, if I'm not mistaken. Now, that's very high. Now, for Palantir, last quarter, we were at 124%. So that's 5% loss of net dollar retention. Still way better than average, but losing net dollar retention is not good. Now, as always, I'm not going to sugarcoat nothing here. You're going to hear it exactly like it is. I'm going to call it like I see it, the good and the bad. There's also good things I'm going to show you. There's a lot of good things, but there's a lot of bad things. I'm not going to be, deriding Palantir because I like the stock. Now, I have a position. I'm long on the stock. You all know this. Again, this is not financial advice. My own opinion might be inaccurate, might be wrong. You got to do research. But because I have a position, because I love the stock, because I'm long, I'm not going to be sugarcoating nothing. That ain't about to happen. So 5% loss of net dollar retention is the opposite way. It's supposed to be growing. You're supposed to be catching up with Snowflake with their 180%, and you're going down the elevator from 124 to 119. Still good, but declining net dollar retention? Woo! That's not good. Now, customer growth. We know this is always a thing for Palantir. They're good at that. Nothing has really changed. We knew that they're going to grow the customer base. Customer count is growing. Average top 20 customers always spend a lot of money. But the problem is that's also the Achilles heel of this company. Look, the fact is that they're dependent on their top 20 customers. We want to see them break out of that. That's not a good thing. When your top customers are spending $46 million each and there's 20 of them, calculate how much is left for the other clients. Almost nothing. So these top 20 clients basically control Palantir's fate. That's called client concentration. It's not a good thing. So that needs to be worked out. The other thing I want to show you here is this is all nice and dandy. Again, I don't know why they keep showing adjusted gross margin. Nobody cares. It's 80% in every SaaS business. SaaS is software as a service. 80% gross margin is kind of, a given in any SaaS company. Keep showing that for no reason, absolutely. Now, I do want to show you something really interesting here. So this is really interesting. Total U.S. revenue growth, 42%. Trailing 12 months revenue, 41%. Nice. But now we're getting to the interesting part. Look at these two numbers right here, okay? Commercial, okay? Commercial growth for this company, 28%, 37%, 47%, 54%. You see what's happening here? Every single quarter, this company growing commercial growth. 28%, 37, 47, 54. Come out this quarter, lose 8%? Really, my guy? Lose 8%? After growing every single quarter, you losing? Now, I get it. There's recession, inflation, all that stuff. But you're decelerating commercial growth? That's not a good thing. Again, that just tells me their sales team is absolutely lackluster. The sales team needs to be overhauled, whatever needs to happen. The sales team don't know what the fuck they're doing if they're losing acceleration on commercial growth. Now, even on the government side, they're losing. I'll tell you in a second, but come on. Even on the U.S. commercial, where they were absolutely blowing everybody out of the water, 136% net growth, only 120, lost 16% of acceleration, decelerating by 16% on commercial growth in the U.S., which is their bread and butter. That ain't good. Look at the government side. Same problems. Decelerating, 66, 34, 26, 16, 13. Now, I know the government side isn't that much of an appeal to me. I don't really care that much. But even on that, you're declining. So you're declining on every single metric I can think of. You're declining on net dollar retention. You're declining on commercial. Not declining, but declining growth. On commercial, you're declining growth on government. So what else is there? We can talk about cash flows getting better. Sure, yes. Gross profit getting better. Sure. I'm going to talk all about that in a second. But you cannot say we're the best, we know better than you, all of you are idiots, we're going to do it our way and just basically miss. Because may I remind you, Palantir have missed. Last three quarters, Palantir has missed. And they missed again this time. And somehow these quarters, financials were even worse than the previous quarter financials. Amazing. Now, let me show you some good stuff. We've beat them down a little bit. We're at the halfway mark of this video. Now we're talking about good stuff. I'm going to try and make it as fast as possible. If I can make this video in under 10 minutes, I'm going to pat myself on the back. Now, before we continue, I just want to remind you, I made a video 3 days ago Go check on my channel. The video is titled Palantir Earnings Warning. Massive warning. Q2 earnings, Palantir. 3 days ago, I told you this is exactly what's going to happen. They're going to miss, and the stock is going to come tumbling down. The stock is down 15% in pre-market. Now look, some of the good stuff. Let's talk about the good stuff. So first of all, let's talk about operating expenses and gross profit. So gross profit for this company has gone up from 551 million in the first 6 months of 2021 to 722 million for the first 6 months of 2022. That is a 31% growth in gross profit. So 31% growth in gross profit, mainly because they're just selling more. So not bad. Also, if you take a look at the total operating expenses, you grew 31% on gross profit, but on the operating side, you really haven't spent that much more. Only 803 million when you spent 812 in the previous quarter. So they've actually lost 1% on operating expenses. So they're spending less money, slightly less, to bring in 31% more money. That's good. Now, if you look at the loss from operations, again, that was always an Achilles heel for this company. They're still losing money from operations. Make no mistakes about it. But instead of losing 260 million, which they lost in the first 6 months of 2021, they only lost 81 million. So that's a huge improvement. But in this point, you might ask yourself this question, well, Tom, how come if they're selling more, they're spending less on operating expenses, and their loss from operation is significantly smaller than it used to be, how come their net loss, right here, net loss, increased by 7%? How come? Well, the answer lies below. And the stock-based compensation, which is the real Achilles heel of this company, the stock-based comp is where it's at. Now, as you can see right here, this is the stock-based comp. Last year, in the first 6 months of 2021, they spent almost $500 million on it. This time, only 300 million. So the good news are they've reduced stock-based comp by 30%. The bad news are they're still spending 300 million every 6 months on stock-based comp, and the sales team is just not delivering. So they're basically throwing money away at these guys who are not getting the job done, because the majority of these stock-based comp is going to the sales teams, which they're trying to build, but those are not working out. Some more good news after we took a shit on these earnings. Look, it's not new. We always knew the balance sheet of Palantir was fucking tight, and it is tight. Lots of cash, boom, 2.3 billion. Lots of asset, 3.3 billion. Nothing's changed. Liabilities, 1/3. So 1-to-3 ratio of assets to liabilities, no debt, lots of cash. We all knew this about Palantir. But the problem is that you have the call where Alex Karp says, hey, we're not going to see profits before 2025, which is absolutely horrendous. Their 30% growth, annual growth, is no longer there, so they're no longer standing behind that. And you basically see this absolute failure of realizing that the product isn't going to sell of itself. I mean, this is just something I talked about multiple times. I mean, if you keep thinking that the product is going to sell itself, you're going to drive this out of business. I mean, this just cannot be. I think major overhauls are required in the sales teams. Major overhauls are required in the go-to-market strategy. The product itself seems to be selling still at a good pace, but a deceleration in the growth in the commercial sector, a deceleration in the growth of net dollar retention, deceleration in net dollar retention, and a reduction in the growth of the government sector are just not good enough. Now, if I have to grade these, it's probably a C-, and I'm being generous here with Palantir. If I had to grade the phone call, whatever the fuck that was, the live press conference, that's an F, absolute fail. Sham Sankar was reading off a few cards. Alex Karp was rambling on about nothing, absolutely non-coherent stuff, not answering the question properly, and basically dodging important questions about what we actually want to hear about. I think as a community, we demand better answers to our questions. And if you're thinking about why Palantir doesn't have more institutional investors, that's exactly the reason why. You cannot miss 3 quarters of earnings and pull this shit and basically say, hey, customers hate us, but they have to work with us because we have the best software. Nobody can copy us. No institutional investor is going to invest in that shit. So you better get your act together, Palantir, because this is getting fucking annoying.